Did you know the average driver is paying $216 a month for car insurance? That's up 11% from last year and 57% from 2022. In this video, I'll show you why it's happening and 7 moves you can make to bring your rates back down.
Bring it down hard!
You click to find out how much car insurance really costs in 2025. In the next few minutes, I'll show you national averages, state outliers, and 7 steps you can take to lower your rates, including a free calculator that can get you rate estimates fast. Across all driver profiles, the average cost of full coverage car insurance is $216 a month, and the average cost of minimum coverage car insurance is $100 a month. But remember, that's a blended profile. Your rates could be higher or lower depending on a variety of factors. In about 60 seconds, I'll show you the 4 factors that affect rates most and how to use that to your advantage and save on your car insurance. But first, it makes sense to explain why car insurance rates are rising in 2025. There are several reasons. One are repair costs, usually due to technology in cars. A bumper that used to cost about $500 to repair might cost $3,000 now. Vehicle prices are higher than ever. Medical costs or injuries in car crashes keep going up. And across the country, more severe weather, hurricanes, floods, etc., means more claims are being made and it's more costly for the insurers. That makes your rates go up. Since 2022, car insurance rates have jumped 57%, although the pace of growth is slowing in the last year. So the big picture, everyone's paying more. But how much you pay, it's usually decided by 4 factors: the amount of coverage you select, your driver profile, your location, and funnily enough, your credit score in states that allow it. Let's start with the first one, coverage, because that's the only one you can control completely. Factor 1, coverage level. It's the trade-off between lower premiums and more protection. Liability insurance is the baseline of a car insurance policy. It covers damages or injuries you do to others. And for an ideal driver profile, this might cost as little as $61 a month. A full coverage policy is one that adds comprehensive and collision insurance. So this is protecting damages to your car, whether it's on the road or due to a weather event, act of God, so on and so forth. For the most ideal type of driver, you might find this as low as $125 a month on average. Going liability only, if you can, and not everyone can, if you finance your car, you probably can't, will save you a lot of money on your monthly bill. The risk trade-off is that you'll have lower protection. But even someone with the exact same coverage can pay hundreds of dollars of difference depending on their driver profile. That's because the next factor, who you are and the various details of you as a driver, can affect your rates by 150% or more. Here's how insurers see it. Age and driving experience are really important risk factors. Drivers aged 19 to 25 pay over $500 a month for car insurance. That's 150% higher than a middle-aged adult. Your driving record is also very important to insurers. Someone with a clean record might pay $215 a month for full coverage, but someone who has an at-fault accident might pay $310, and someone who has a DUI might pay $377. These traits define your driver profile, but it's a type of thing you can gradually improve, either by aging out of those risky younger age brackets or driving long enough that you don't have an incident on your driving record in the last 3 years. But even if you're a perfect driver, one thing can still double your bill: where you live. Location is a massive influence on your premium. We found that the same driver would pay $75 a month for car insurance in Vermont and $243 a month in Florida. That's because states like Vermont, Maine, and Idaho benefit from low population density and relatively mild weather, whereas states like Florida and Louisiana can have some crazy weather, fraud, and high population densities that skyrocket those insurance rates. There's no getting around it. Insurance use your location to determine claim risk, whether that's weather risks or even litigation costs. Now, you're probably not going to move to save on car insurance, but you can shop around to find the best option for you where you live. And the last major factor affecting car insurance rates might surprise you. It has nothing to do with how you drive, but more about how you manage your money. In most states, your credit-based insurance score can greatly influence your car insurance rates because insurers say those with poor scores are more likely to make a claim. Drivers with excellent credit pay an average of $120 a month for full coverage car insurance, while those with poor credit, about $313 a month. That's over $2,000 a year in savings because you have good credit. This type of pricing is controversial and it's actually banned in states like California and Hawaii but slowly improving your credit score over time is one of the best ways to improve your car insurance rates. Now that you know the 4 biggest factors, coverage level, location, driver profile, and credit score, let's talk about how you can save on car insurance rates. Here are 7 really important tips that can help you lower your rates fast. Think of this as the next part of your car insurance playbook, the way that real people save $50, $100, $200 a month without removing the coverage that they actually need. These are the 7 most effective ways to lower your car insurance premium in 2025, based on an analysis of over 80,000 quotes across the country. And don't skip number 5 like most drivers do. It can actually save you a lot of money. First, shop between 3 to 5 different insurers. We routinely see that the same driver can save $100 a month with a different insurer in the same location with the same coverage. Second, make sure to bundle your auto insurance with your home or renter's insurance. That can save you anywhere from 5 to 20%, with the home insurance bundle saving you more. Third, raise your deductible. Raising your deductible from $500 to $1,000 could result in 10 to 20% savings. Just know you'll pay more out of pocket if you make a claim. 4, telematics or safe driver programs. Telematics track your car behavior, so if you're a good driver, you can save extra on your insurance. 5, optimize your coverage. Make sure not to underinsure, but if you have an older car with low actual cash value, you can save a lot of money on your car insurance by removing comprehensive and collision insurance. 6, credit hygiene. Improving your credit score over time can save you almost $200 a month if you have poor credit. 7, discounts. Good student, low mileage discount, multi-car discount, safety features. If you stack several 10% discounts, you could go from, say, $150 a month to $110 a month. Now, average pricing varies wildly by company. We routinely see the same driver being charged $97 a month for full coverage with one insurer and $157 a month with another insurer. Moral of the story, don't be married to your current insurer. Shop around, especially when you're at renewal for your car insurance or after a major life event. And if you're looking for specifics, we did a whole video on the cheapest full coverage car insurance, which you can find here. And want your real number, not just an average? Visit MoneyGeek's car insurance calculator and just enter a few short details, age, zip, car, and see an accurate rate in seconds. All right, now I want to hear from you. What's your monthly rate and what state do you live in? Drop it in the comments and I'll offer you 1 to 2 tips specific to your location and driver profile. And don't forget to subscribe. We put out videos on Tuesday and Thursday that help you manage your insurance and save money on your monthly bill.